Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup. This is for the trading week ending April 23rd, 2021. I'm Preston Brent. Thanks for tuning in. And this week's theme is too tired or are we just getting started? So let's take a look at the market action this past week. Kind of see where things went, how things moved about. So let's look at first the index performance here. We'll start off with the US primarily. You can see that it was a pretty flat week. I mean, the Dow, S&P, and Nasdaq were all down on the week, but just barely below the waterline. The Russell was just barely above the waterline. Year to date, everybody's doing good. I mean, the Dow and the S&P running neck and neck, both a little over 11%. Nasdaq is up about a little over 8%, 8.5, a little over 8.7%. Russell's the clear winner, up 15% for the year. And of course, if we take a look at the valuations and volatility for this past week, the forward PE ratio is still fairly elevated at 23.61. The S&P dividend yield came down just a little bit this week. It's at 1.39%. 10-year treasuries at 1.57, giving us a spread of about 18 basis points of the treasury over the dividend yield. That still keeps money flowing into equity markets a little bit. And you can see volatility came up just a little bit this week, 6.6%, to round out the week at 17.33. We just cannot get volatility below 15. Okay, it's still been a little bit elevated in over the past decade. Ever since we hit COVID, we've got a bid in volatility, although it's come in a little bit. Sector performance wise, healthcare was the best performing sector for the week, coming in at a little over 1.6%. Worst performer for the week, energy, coming in a little under 1.6% for the week. Sector performance year to date, energy still leading the way. It's been leading the way all year long at 26.77%. Staples is in the green also, but kind of bringing up the rear at 3.7%. And of course, if we look at the rest of the markets here, well, let's just talk a little bit about economic data. Why don't we just kind of chat about that for a second? We had unemployment claims fall to the lowest level since the onset of the pandemic. We got those numbers out from the Department of Labor. It showed that it's continuing to improve with weekly jobless claims well below, or it's still above pre-pandemic average, but it's still, fairly strong. We did see existing home sales fall 3.7% in March. We got a limited supply of houses on the market compared to the number of buyers that want to buy them. Okay, so that tends to push the median sales price up a little bit. And then, of course, if we look at U.S. Treasuries, Treasury Yields are still it kind of came in just a little bit this week. Investment grade corporate bonds continuing to be well received in the markets, and the credit spread between the high yield and the junk still remains relatively tight. So I don't see any backup in the credit markets. Of course, we did have this week a little bit of a pullback in the markets very suddenly on Thursday when the unaccompanied minor, we call Biden, he proposed nearly doubling the long-term capital gains tax for taxpayers earning more than $1 million a year. But we're smack dab in the middle of earnings season. Now, this coming week is going to be a kick-ass earnings week. We've got Tesla on Monday. Tuesday, we got Microsoft. Wednesday, we get Apple. We get Shopify and Boeing. We get the FOMC on Wednesday, of course. No interest rate hike. Thursday, we get Q1 GDP first pass, forecast expected to come in at 5.6%. Earnings-wise, we get Amazon and MasterCard and Twitter. And then Friday, we round out earnings with Chevron and Exxon. We get some of the big oil companies. But we're going to get a market cap of about 9.2 trillion in market cap of these big companies, right? That would be between Tesla, Microsoft, Apple, Amazon, MasterCard, some big ones coming out. So, and that is about 25% of the market cap of the S&P. So these earnings this week are really we're gonna see the S&P move on that. And based on the stats that we've got so far, they should do fairly well. And then, of course, if we look at uh, Europe, take a look and see how Europe is doing. If we look at their index performance, you can see, like the US, pretty much everybody was in the red for the week. DAX, CAC 40, FTSE, Euro stocks, the 50 largest companies across Europe, all in the red for the week. Year to date, everybody's still strong. And then, of course, if we look at China over in the Asian markets, China Hang Seng was good in the green. The Japanese markets in the red, pretty good bit. It was the worst performer this past week, primarily because Japan was talking about doing a tight lockdown with an increase in COVID cases. Year to date, everybody's solid in the green. Okay, so we're getting some really strong numbers out there, and with earnings, year over year comps are fairly easy to beat. All the numbers are just blowing out the statistics for total earnings and earnings growth for the year. And of course, that's going to translate into strong market prices. And I know that we have been really in a buy the dip mode, very strong. Let me just take you over and show you some charts here for a minute. Let me just come over here. We're going to take a look at the E-mini S&P 500 futures. You can see, like the index performance I just showed you, it is basically for the past week been relatively flat. Okay, I mean, just been really flat. You can see here that we've just been kind of hovering around right at that level here, and really hadn't gone anywhere, right? I mean, just hadn't gone anywhere in this entire week. Up, down, red, green candles, just kind of a lot of confusion in the market, net, basically flat. You can see we did on Friday make new all-time highs in the S&P 500 futures. Same thing with the SPX cash index. You can see 4186.75. Okay. You can see the 2020 closing price, and then I've got a key fib note here at 0.23%. I believe that we're going to come down and test the 2021 lows in the summer months of this year. Okay. I've told our members that we should be playing long and strong right now, at least through earnings. I think this week we're going to get strong earnings out of Microsoft, Amazon, Apple, very strong earnings. I think that's going to move the markets higher. We'll probably make new highs. We'll probably get over 4,200 this week. I pity the company that misses earnings because they've already priced in strong earnings growth. That's already factored into the price. But if they come in stronger, which is where the stats have been thus far with companies that have already reported, I believe we'll see 4,200, possibly even 4,250 by the end of this week. Remember, my target, as I've told you guys, was between 41 and 4,300 for the year. And we may end up hitting 4,300 in the next 6 weeks and then not see it again for the remaining part of the year, because I do believe we're going to get a pretty healthy pushback in July timeframe going into August. But this is what I'm looking at right now. We're very extended from the 50 EMA, 200 EMA, extremely extended on the S&P 500 futures. So a little bit of a pullback is in the making, but I don't see that before we get through the thick of these earnings. Okay. If we come over and look at our Fang Index, which is just comprised of Microsoft, Facebook, Apple, Netflix, Google, and Amazon. Netflix really had a bad miss, basically on subscriber growth. I would use that pullback as an opportunity to pick up some. I think longer term, it's going to do very well, but it's just finding competitions taking bleeding away some of the subscriber growth. But Netflix is just very solid right now. So I would use any pullback as an opportunity to pick up. Looking at the Fang Index, we made all-time highs in this customized modified Fang Index I've created on April 19th. And you could see here just a little bit of a pullback, but I think we're going to take that out once we get through earnings of these. Now, Netflix was the only one that's really come out of these here, but we're going to get Apple, Microsoft, and Amazon this week. I think that's going to be enough to move it higher. Okay, you can see there's no divergence in the MACD, so to me it just bodes well to move higher short term. Now, if we look at the Nasdaq 100 futures, again, same thing. We're kind of running sideways right now for the past couple of weeks. Excuse me. In the Nasdaq 100 futures, okay. And then, of course, if we look at the cash index, same thing. Hang on, let me get a drink of water here for a sec. Sorry, guys, but we could see here, been running sideways. And then, of course, if we look at the Dow futures, same thing. The S&P 500 E-mini futures was the only one that managed to eke out new highs on Friday. But I think we're going to go higher. If we look at vol right here, you can see over the past week, excuse me, we moved higher. It's just kind of going up and down. Green bar, red bar, green bar, red bar. I think it's going to come back down again as we move through this next week with these big earnings coming up. Treasuries running sideways here to slightly higher. As I told you guys many times, I'm going to be a seller on rallies in the bond market. If we can get up over the 50 EMA, I would sell it. Now, if we get that pullback that I'm looking for in July timeframe, June, July, into August, I think the bonds are going to rally, and then that'd be a great shorting opportunity in the bond market. And of course, if we look at the 10-year interest rate, you can see after hitting the peak here of 176, it slowly pulled back, but I believe we're about to get a rally here in interest rates, and bonds may tail back off again. And then the next big rally we're going to get in bonds and pullback in interest rates will be in the summer months when we get that pullback that I've been talking about here. Currency-wise, the euro. Remember, I've been bullish, I'm more bullish the euro than I am the dollar. You can see down in this area here, we broke out of a downsloping trend line. I don't need to draw it on the screen, but you can see it or just visualize the downsloping trend line here. I think it's going to run back up here. And my longer term target for the euro is up here around 126. So FXE selling bull calls or bull put spreads underneath XLE. Under FCX. I can't speak. FXE, Foxtrot X-Ray Echo, would be the great way to play euro. Okay, it's going to take out these highs, and it's going to keep on going. Same thing with the British pound, right? British pound, once Europe gets all of their COVID crisis behind them, I think you're going to see all these currencies move up, and I think you're going to see the dollar move down, and that's going to put some upward pressure on gold. More on that in just 1 minute. And then, of course, if we look at the dollar, came down pretty hard on Friday on that big up move. It hit a high here. I think it's going to work its way back down again, right? So we did not get a divergence in the MACD here. So that did suggest that we're going to have buyers step in and buy the dip. But once it broke the 50 EMA right here, not really holding the 200, it's just put more pressure on the dollar to the downside. All right. So I do like the euro and I do like the pound. All right. Just understand that. And then, of course, if we come down here and we look at gold, even though gold was down, we've broken out of this downslope trend line right here. I think if it catches its way and moves back up and gets back over the 200 EMA, it couldn't really do it here over the past 3 days, this past week. It made a number of runs at it, but as you can see, it couldn't really quite get above. If it does, from a technical standpoint, I'd be interested in taking the gold. Now, remember down here, we had a beautiful bullish divergence, and I said trading gold to the upside is a good idea short term. As soon as it gets near the 50 EMA, which right here is also in this downsloping trend line, tighten your stops, and then it just busted right through. So that's a good sign. I think longer term, gold's going to also move higher because it's going to move higher on a weakening dollar. Same thing with silver, although silver is well ahead of gold, but it's just been nothing but chicken soup here. It's just been running sideways. So I think gold is going to play a little bit of a catch up to silver here. So I see those two as possible plays. Now, copper, I've had our group long copper for quite some time. You can see back over here, copper is just, just really going like gangbusters, just moving up very strong. And then every time, like right here, it came down and found its support element and then it moved up. And I do believe copper is going to make some new highs here. Okay, it's going to come back up. Copper futures is going to move up. And then that, the way we're trading copper in our user group is just a couple of different ways to play, but I think it's going to run up. Now, when we do have that pullback in the summer months, copper's going to pull back again too. But just look, longer term, you want to be bullish copper, primarily because of everybody going green. It requires more copper to fulfill manufacturing contracts and component build. Copper is going to be a very much in demand metal. That's one of the reasons why it's rocketing up like this. Okay, so I think longer term, it's just going to go higher and higher and higher. Okay, so that's a little bit about copper. If we look at palladium, we haven't played palladium in a while, but if you look on here, we took out these previous highs right here with palladium. It came down very hard. This is back in February with the pandemic. We're already above pandemic highs. I think palladium is going to move higher, and then it'll be an opportunity for us to go short again. All right. Right now, like copper, palladium is going to be in demand with batteries and things like that. And there's mining issues and supply issues with palladium, and with very strong demand, I think it can move up higher. But like copper, I think it could have these. I think palladium is more susceptible to a bigger down move than copper. Copper's got a longer long-term demand for it that I think is going to be it's going to play out very strong for copper. Okay. Of course, if we come down here and look at energy, if we look at oil, if you guys remember, I told our members to fade this move up here with bear put spreads, right? Bear call spreads, credit spreads. Down here, bull put spreads, bull call spreads down in this area here. But really, an ideal way to play this, or an easier way, or what I'd call a couch potato way of playing this, is just with iron condors, or just condors using all calls. Okay. Bull put spreads underneath here are also pretty good with oil near term. I don't see oil coming back into the middle 50s, but I do see the range is somewhere around 55 to 56 on the downside, on the upside in the middle 60s. So figure 65 to 55, play that range, and I think at least for the next couple of months through the summer months, even though driving is going to pick up, you're not going to see as much international flying, so there's still a little bit of a pullback here. Once they start opening up and we see that open up a little bit more, I think we'll see oil move back up higher. So the least risky trade would be bull put spreads in oil short term. All right, keep the spreads tight. You don't want to get run over, but that would be an easy trade for us. Now we've traded. I've had some interesting suggestions on gasoline futures and gas, trading gas. I'm not going to show them here. Members, we'll go a little bit more detail on that. Nat gas, there is no trade on nat gas. You can see we're in kind of a no man's land here. Either way, it moves, right? Now, for our members, I'll go into some interesting stock plays that have kind of surfaced for our weekly market watch this Sunday evening. We'll take a look at some other ways to play volatility when we got this big dip, I suspect, coming up. But this week, net in summary, we've got the big guys putting earnings out. Microsoft and Apple and Amazon, huge players. So I'm expecting good things out of them, and I think that'll be positive for the markets. If the markets sell off on those earnings because they didn't blow out the numbers like the markets want, then I think the markets will finish in the red. So it's But I think the probabilities favor these guys to really come in strong for the week. Remember, they represent 9.2 trillion in market cap, those companies, and out of all of that, that's about 25% of the entire weighting of the S&P. So if they do good, S&P's higher, all right, and we'll be over 4,200 for the week. All right, everybody, have a really great weekend. Members, I'll see you this Sunday evening for our weekly market watch. Take care, folks. Ciao now.